Hi YouTube! So this video is going to be a quick video showing you guys how I would come in the morning and just quickly kind of mark up my chart if I was just doing naked chart or like clean chart trading. This is something a lot of you guys ask me about, and I think that so many of you neglect to learn this, and it's really, really important to understand. Even if you're using like indicators or you're using something where you have like a rule-based system, it's still really important to understand these concepts so that way you can help yourself weed out bad trades that are happening when you're like following indicators only. So having some sort of background with like naked chart trading or clean chart trading, whatever you want to call it, is very important. And I can trade with or without indicators, and I think that that's something that has helped me grow as a trader and will help all of you as well. So I want to show you guys like how I would look at the charts when I come in without any indicators on, and just showing you like a quick markup. I am on US 30 because I love US 30, so that's what I'm showing you guys. And I really am looking at this as far as like how I would potentially trade today. And then I am on the 15-minute because that's just my preferred time frame, but marking up support and resistance and using trend lines is universal when it comes to the time frames. You can use them on any time frame. The rules and the idea are still the same. So basically what I do when I come into the charts, the first thing I do is I draw my support and my resistance. So what you'll see is I'll mark like a higher and a lower for my support and resistance. So I just up here marked my resistance. So that's the top of like where the market kind of currently is. And then I also will mark my bottom. When I mark them, I try to avoid like, I wouldn't put it way down here, just because there's only one wick there. I try to place my support and resistance where there's more touches. So you can see there's touches here, more touches within this area. I might even come up a little bit more to grab a couple more of those wicks. So kind of like that, where I'm still getting the most amount of touches where price has been most frequently, not just one candle where it was down here. You want to have it more like kind of in a zone. Think of it like a zone. And then same thing up here, we have a good amount of touches. So maybe bring it down a little bit more. So that's marking up my like outer areas of my support and resistance. So that's my high, which I have up here for my resistance, and then my low, which I have for my support. Then I will come in and I will mark up one more zone, which I call like either a minor or a mid zone. This would be something in the middle, like where you would see the market like the most in the middle. And at this point in time, you're kind of looking more kind of like this area in here. We have wicks here, candles, a bunch of candles that support here, some resistance here, some more resistance here, and a break of it here, a little bit of a support zone forming. So I like the way this looks here. And that's where I would put my, like what I would call a mid zone or a minor area. So that's all you need. A lot of you, sometimes I'll see like you guys will put so many of these zones in there, and you don't want to do that. You want to leave it that there's enough room for the market to move, because the movement is what's making you money. So you want to actually have like a clear, strong area of support and resistance, but you don't want to have a ton of lines on your charts where it's like the market is only going from, I don't know, from here to here, and like there's no movement there. So you want to try to limit it. I try to tell you guys at max put 4 lines on. I typically only put 3 unless I saw some really heavy zones somewhere else, but otherwise I would probably only leave 3 when I'm first coming in to look at this. So I'll zoom out just so you can kind of get an idea of what it looks like, but you can see when I'm zooming out, like the areas that I've marked, that you can pretty clearly see they are zones. We have movement in here, and it's well respected here, as well as a resistance here as a resistance. It broke through here and formed support along here, comes down, really went down, but we're not worried about what's down here right now. That's too far gone. Then since then, the most current market, you can see we've been bouncing around in this area between support and resistance, pushed up into this area where you now have been bouncing around between making support on this mid-level and hitting resistance up here, and then kind of just bouncing through both of them, as you can see. So what I do when I come into a market like this is I just mark up here. You don't have to worry about all this that I'm zooming out. I'm just showing you, you can see that the levels we've marked up, they do make sense that the market has respected that in the past. But you don't need to go that far back. You just want to mark up whatever you can see on your current screen, and then just zoom out to make sure it makes sense. Okay, so as far as this actually goes, you could just trade support and resistance and just trade breakouts and retest of these areas that we've marked. But a lot of you guys like to also include trend lines, and adding a trend line in as well as support and resistance is just going to give you another confluence. So when you have a break of a trend line, that helps you kind of see like what is the market doing. If it's a break of a trend line and it happens at one of your marked up support and resistance areas, that's a double confluence for you to look at a potential trade entry. So I'll show you guys here. So we'll grab our trend line tool and we'll just draw it with the most frequent market that we have. You can go far back if you want to do a bigger trend line, but we're just doing the immediate market here, so it doesn't have to be a massive trend line. But as you guys can see, that's how it looks. Actually, it should be a little bit snugger. So when you're drawing your trend lines, you want to be at the lowest point of the market and then kind of following it up, but like as long as it's been touching there. So it's touched here, and then that's kind of where your trend line is at this point, because the current market only reached up to this resistance level. So what you'll see here, and why this would be like a decent trade to look at, is that you've had now a situation where the market has rejected here off of your resistance level that you've drawn and marked up, but it's also now broken through your trend line. So your trend line was telling you that the market was going up. So for a while there, for your trend line, it was just in a very bullish market. And then it's come to hit your trend line and it broke through your trend line. So now you're looking at a potential situation where you could get in for a sell. There are times where it may come back and retest your trend line and then drop. So you have to be careful when you're marking these up to make sure that your stop loss is beyond your trend line and your resistance area or your support, depending on which way you're entering. So you don't want to be putting your stop losses like really snug or just like right on the actual trend line. You want to make sure that you're putting it a little bit higher here. So I'll show you how this would look marked up. There's two instances where you could be entering here. There is one case where you could be aggressive and you could be entering in at the close of this candle here. The reason is, and we would put your stop loss, like I said, slightly above. So the top of these wicks is good. As you can see, you're above the resistance area a tiny bit, and you're also covering your trend line. In case it comes back to retest in this area, your stop loss is still good. But you don't want to be crazy. You don't want to be like way up here. Like you just want to be like around this area. Like that's fine. This is your one potential first entry, which is more aggressive. This takes into account candle reading. So if you are somebody who understands candle reading, which I always say in my videos you should, this here is a signal of a reversal candle. But this alone is not enough to say, okay, let me go ahead and take a reversal, because they print all the time. You'll see candles all the time where you'll see potential reversals, and these little guys print everywhere. So that's not enough to say, oh, let me go ahead and take a reversal. But you do have the reversal candle print. It's at a key level that you have marked up and that you are recognizing now as a resistance area. And then you have a strong bearish engulfing candle. The bearish engulfing candle that you're seeing, that's this guy that the arrow is pointing at. That's him. That candle plus your reversal candle that's up here, this one, those two happening at a key level of resistance that you've marked, along with a slight test of the actual trend line, could be considered an aggressive entry for some people. So you could potentially get in there. So some of you who are a little more experienced, like you could get into that entry, and then you would be marking it up. Your stop loss would be slightly above the trend line and the resistance area. And then your take profit would actually be all the way down here, which is a really nice reward. It's a 2.66 reward. And the reason is because that's the next area for the market to go to. Once you've broken your trend line and it's confirmed that it's broken, the only next logical place for the market to go to is to your next area. So you can see it's been dropping and it's going there. And, it doesn't always drop this easy. Sometimes it does things like comes back up, wiggles around a bit before it'll actually get there, but it will get there. And then, then that's your trade. That's what you'll end up getting your 2.66 reward on that one. That's if you're a little more aggressive and a little more experienced, and you can kind of put together all those confluences, like the reversal candle, the bearish engulfing, the break of the trend, the rejection of a resistance line. Like, those are your 4 confluences that you're getting. So that will help get you in a little bit sooner. If you were newer to this and you're still trying to figure out like how to process this all, you would wait for the actual candle that breaks the trend line. So that would be the very next candle. So your markup would look a little bit different. So you would enter in at the close of this candle. Your stop loss would still be similar. You want to be like above this resistance and above that trend line a little bit, just in case it comes back up and peaks back up. And then your take profit will still be down here. It's not as great of a risk to reward, but it's still a good risk to reward. You're still getting more than a 1-to-1. You would be getting a 1.41 in this trade, and that's still a decent trade. It's still a great trade to take, but same thing, you may have, like I said before, you're going to probably, usually, not always does it just drop like this, you'll sometimes see like some wiggling around. You might go and draw down a little bit before you actually hit your take profit. But that's, not happening right now. It's actually working out really beautifully for this recording, which is nice. But just don't expect it to always just drop like this or to shoot up all the time. There are definitely times where it will potentially just kind of bounce around before it gets to your take profit. So set realistic expectations. But as far as this like actually goes, this whole setup, this is all you would be doing. If you hit this point where you get to this and you're hitting this and you want to potentially hold because you think maybe it may break, maybe you're looking at a true reversal and not just a retracement of this move, then you could look at potentially moving your stop loss. I would suggest that you don't move your stop loss until you've fully broken into this zone. And what I mean by that is coming down underneath. So you've broken now this level of what is support and you're coming down to make it new resistance. I would not actually move your stop loss until it has come up, proven to retest this new resistance level and rejects off. Once it rejects off, you can then safely move, if you want to continue to hold this trade, move your stop loss and you could target a new take profit down here. And, you could trail your stop loss along the way as you feel fit, however much profit you want to secure. So you could be securing along the way. But that's how you guys would be trading something like this. It's actually quite simple. People tend to overcomplicate support and resistance and trend lines, I find. It doesn't need to be that complicated. You can pretty much make this happen with almost a lot of situations, but a big thing that a lot of you I find are lacking is your candle reading knowledge. So adding in other confluences. So if you don't want to use the indicator, you add in another confluence like candle reading and understanding each candle and what they mean and what they all mean something. Like they don't just print randomly for a reason. Like every candle has a purpose. So start looking into your candle reading a little bit more and then understanding what that means when they hit these key levels that you're marking up, like of the support and resistance, or they're breaking through a trend line or something like that. I will show you quickly. I know some of you guys want to still do this, but you want to throw on some of the indicators. And you can do that as well. So you don't want to be indicator heavy, but you want an indicator to confirm for you that you're actually seeing what you're seeing. So I get that, and that is possible to do. So you will see at the close of the candle that I was saying you would get in on if you were still kind of learning and still kind of getting comfortable, you would get a confirmation with the BJTSI. This is actually a free indicator. So I will show you guys. There's no difference in the settings. I literally just threw up a default for it. So that way you guys could just see what I mean when I'm saying use like an indicator of whatever your choice would be, whatever indicator you like. This indicator is by this guy here, this Bajorum TSI. So if you guys are wondering what I'm showing here, but that's what that one is. It's free, completely free. You don't have to do anything, and it was default settings. So, but that's just showing you guys what that looks like, and you do get the confirmation there. So if you wanted to have something else kind of like validate what you were thinking, then you would get in at the close of this candle, like I said, and then put your stop loss up here, target here as your take profit. So that's how I would look at this, like a quick 5-minute type of markup, and just see what's going on in the markets. If there's not actually breaking through like you would think it would, or it's not at the point where it's done anything, so maybe the market was way back here still and it hasn't actually gotten up here, you can still draw your trend line in your areas, and you just wait for the market to get to that point, and then you can set alerts on your lines. So if you come to your trend line and you right click it, you can add alert to your trend line. You can set it however you would want. then it will set an alert for you. As soon as it crosses the actual trend line, you can get an alert. So you don't have to stare at the charts all day long. You can also set an alert for your resistance area. So same thing, set the alert, and same way you would set it like once per bar close, crossing, and then how you want to be notified. So that way, if it breaks through your resistance, you know that you're not worried about looking for it right now to break your trend line. But if it does break the trend line, you'll get an alert either way. So you know whether you're buying or whether you're looking for sells. So that's where that can be helpful for you guys. So you don't have to stare at charts all day. I know a lot of you guys think you do, but you really don't. Just set the alerts. You can still mark them up with a naked chart and just set an alert. All right, well, that is it for this video. I don't have much else to show you. Support and resistance and trend lines are pretty basic, and just make sure that you guys are taking the time to really learn candle reading, because that is huge, and it will also help you as far as adding an additional confluence if you want to use charts that are like clean chart or naked chart trading. Okay guys, that's all, and I will see you in the next one. Bye.